What's up, YouTube? This is Pookie's Revenge. I am back. I had a little issue. YouTube was trying to keep me down, but today I'm going to give you the keys to the kingdom. So it's been a little bit. I had some issues with my account, but we're back. So the goal for today is I'm going to update you guys on what's going on in the community and with this account. So I'm going to be sharing my small account progress. It's a small cash account I've been doing, I think, since November or something. It hasn't been too long, but we grow it up, then we trim it, we grow it up, we trim it. So this current iteration, I just started on April 1st, and the account is damn near tripled at this point, just using the same entries that I teach and the same risk management that I teach, but we're letting the profits breathe. So that's the goal for this, and this channel is going to have a new YouTube tutorial series. So I'm going to start posting a series of shorter tutorials for beginners, and then we're going to work our way all the way up. I'm also doing a Zoom webinar. It's going to be a stock market trading bootcamp. I'm going to do it either every Thursday or every other Thursday in the daytime. I might experiment with the times, but it's going to be pretty fun. We're going to give you guys everything you need. If you give me 1 hour of your time, I'll give you everything you need to survive in the market. So with all that said, let me give you a little sample of the tutorial series, and then I'm just going to screen share my small I'm still in this trade from MLEC. It's from this morning. We already traded all the stuff this morning. Locked in most of my profits. It's up about $177 minus the current open P&L on this MLEC trade. I had a sell order filled at, or I had a sell order placed at $13. It just didn't fill and the price pulled down. I still like the volume profile. I still like the level here. So we just kind of bounced right out of that. And here we are. So we're just chilling, waiting for this one to resolve. I'll probably still maybe take a small hit on it just to lock it in. But this account's up 11.17%. And if I come over here to the account tab, you can see last Wednesday was the first. That's when I added the $500 in. I boosted that up 127.47. Then Thursday, I think I traded SPX on that one too. But we doubled the account. We doubled and then some. And then this morning, just trading equity and I think 2 small SPY contracts, we're up about 10%. So the account is now officially over $1,500. It's tripled. I can walk away at any time. Previously, we were seeking a 1.5% profit per day, and we did that very well, very consistently. But we're going to step into the big boy leagues here with this account, and we're going to make it grow a little bit faster. So that's the plan. And to get that started, I'm going to give you guys the first and probably the most important lesson right here, right now, that most people just don't get. And that is the volume does not behave the way that you learn about volume on YouTube. And this is a YouTube video, so I understand that. I encourage everyone to scrutinize everything I teach. You guys see my results, you see the results of my students, but I can't guarantee that's going to happen for you. So what I would rather you do is just scrutinize everything I say, scrutinize everything everyone else says. It's your money. And whatever's left should be what makes the most sense for you. Okay? So if things make sense, you're free to collect data, you're free to test, you're free to practice, you're free to expose your money if you feel comfortable. But if something doesn't make sense and it's something I've told you, have the conversation. We can easily reach an understanding. We can make sure that things work and that they're understood and they're communicated clearly. And if it just doesn't make sense for you, that's okay too. I don't take anything personal, but if it's like another YouTube video and they say, buy this, sell that, use this indicator, they're just trying to rip you off. Don't fall for that. I will never tell anybody what to do with their money. So I will tell you how money works. So if we look at this widget right here, this is the order book, and this is something that most people don't understand. And before we dive into what that is, which I'm going to do much more in depth on Thursday, we need to talk about what the market is, because this is something that people just get a little bit hung up on, so I don't want to spend too much time. It's a very simple clarification here. But most people think that the market is this big entity that's, it's a very specific thing. The market is just a word. It's a term that we use to describe a collection of exchanges, which are real things, and that's where people get hung up. So the market itself does not technically exist. It's not a real thing. It's just something that we use to describe this collection, this network of exchanges. And the exchanges are just digital auctions. That's all they are. They don't have, crazy ivory tower control room warlocks pushing buttons and all that. You're arguing with a server. It's just a server that's sitting in a computer room. Its job is to take incoming orders and match them with pending orders. That's all it does. So if I want to sell these shares up here at $13.50, for example, nobody is currently willing to buy at or above $13.50, so my order sits there. It sits right here on the order book. Well, it's not showing because I'm not big enough for that on this account. But if I was, you would see it down here at $13.50. So we've got a collection right here at $12. It says 5,978 units. So nobody's willing to buy at or above that price, which means it's pending liquidity, which means that if there's incoming volume and there's an agreement in price and an agreement in quantity, a transaction will take place. That pending liquidity will then be absorbed because it becomes a transaction. Cash and shares change hands, and then it gets removed from the order book and moved down here to the time and sales, and this is where we see it print on the actual tape. Let's take a second and process that, okay? In order to have volume at all, in order to have price move at all, you need an overlap in agreement, which means that if the bid is 11.01 and the ask is 11.19, that just means that people are willing to pay $11.01 at a maximum. They're not willing to pay 11.02. They're not willing to pay 11.03 unless it comes through at a higher price or a different type of order. But the pending liquidity, meaning the orders that are sitting there, now it moved down to 10.84, people are willing to pay at or below $10.84 to buy shares with limit orders. Now it's $11. And on the ask side, this is the minimum people are willing to sell for. Okay? So in this scenario, we need market orders to come in. We need aggressive limit orders to come in. We can't just have the pending liquidity because then it's a stalemate and the price doesn't move. Okay? So what this looks like is we've got limit orders, we've got market orders. I dive into all that stuff on Thursdays. And in my coaching program, I also have a coaching program, by the way. Pretty stoked about that. But in order for price to move, we have to have that overlap in agreement, and then it has to be printed. So if I'm holding my hand out, extending an offer, and I want a transaction to take place, I need to either hold it and wait for someone to come up and meet me on my terms, or I need to compromise and move mine down, my expectations down, and then I can go to where they're at. And that's all the market does. It's not an abnormal number of buyers coming in. It's not an abnormal number of sellers. There is no imbalance. That is an urban legend that has been given to YouTube gurus by institutions that want to tell people to trade a certain way so they can exploit them. So ultimately, every transaction you see here in the volume has an equal and opposite buyer and seller relationship. Someone has paid cash. Someone has gotten shares. Okay? And that's all it is. That's all the market is. That's all the market ever is. Doesn't matter if you're trading options, futures, forex. It's all the same stuff. You have to have equal and opposite. So there's a narrative that people tend to fall into, especially new traders, in that they think that buyers are coming in all of a sudden, that there's more buyers in control. In reality, what's happening is you've got ask orders coming in, meaning they're orders that are trading higher in price because the agreement has moved up where there's the overlap. And this is both buyers and sellers. So if you do have buyers coming in, they're just reaching the sellers where they already exist. So they're already waiting for them. So they're already outnumbered by default if that was the argument, but it's not accurate, okay? So in order to have price move, you need to have either limit orders if they're buys to come in on the ask, or you need limit sell orders to come in on the bid, or you need market orders to fill the gap between them, and that's what these white orders are, is they're either favorable limit orders, meaning they've been filled below or above the price that's been asked, or they're market orders that are coming in and just getting the best available fill. Now, in this case, there's an 11-cent spread. So if I come over to something like SPY, that is highly liquid and highly active, there's a 2 or 3 cent spread here. It's much tighter because there's a lot more happening. There's a lot more participation. So the agreements are much closer together. Okay? So when the volume slows down, the exchange widens the spread because it's trying to reach out further and further for these overlaps in agreement. Okay? So again, if I come back here, you can see there's a 23 cent spread, sorry, forgot my math there, between the bid and the ask. So the price has had to reach out so much farther than something like SPY in order just to find an agreement. And you can see it constantly finds agreements, which is pretty cool. Now, in this case, if I look at a higher volume stock that's very liquid and is also a low float trash runner for the day, like AIXI, which definitely picked up after we had our boxes drawn, then you can see it's a much tighter spread. Now, this is a sub-dollar stock, so it's not going to be 1 or 2 pennies. It's going to be fractions of a cent. But this is the idea. So now you can see there's a whole bunch of pending liquidity here on the bid, and there's a wall right here at 68.11. There's 2 small walls here. I don't know if you can see those at 69 and 70 cents. but there's more pending liquidity here. So if these orders stay white, meaning they're mid fills, meaning they're likely market orders or unfavorable sell orders, the price in theory should come down. Now there's a wall at 69.66. Let's see if this size gets filled. So far not, right? It's just predominantly ask fills. There's some green ones, meaning they came in on the ask, so the price is going to move up. So this is the easiest way to understand volume, is just understanding how it happens. And this is where most people go wrong. And then everything you build on top of this is like building a castle on a beach. It's just the foundation is not solid. So you have to understand what drives price if you want to take advantage of it. And that's our job. It's to find high potential, low risk opportunities and to get in and out with responsible position sizes to leverage those opportunities as efficiently as possible. And in order to do that, I need to know where the potential is and I need to know where the risk is. All I have to do is choose whether or not I'm in or out. I don't get to choose if the price goes up or down. Okay? So with that said, I don't want to ramble a whole bunch. This is an 11-minute video. I wanted it to like maybe 5 minutes, but you guys know how I get. I am back, and let me just pull up my Discord about this trade and this account. You know, I'm not just showing off or anything. I'm just showing you guys what I do and kind of how I do it and why I do it. And again, I do have that new coaching program, so it's pretty cool. We're actually just starting the new cycle. It's an 8-week cycle. We're starting that this week. So Wednesday at 2 p.m. Eastern, I have week 1. If you guys are in there, I look forward to doing that again. We just finished our last 8-week cycle last week, so I'm excited to get this one rocking and rolling again. So with that said, I appreciate you guys all watching my videos. I am back. We're definitely gonna make more content. I'll try to talk slower next time, but yeah, I'm looking forward to it. I'm all over the place. I'm excited. So I'll see you guys there. Hang on to that volume thing though, because that's what drives all supply and demand. Okay, someone has to be willing to buy something. Someone has to be willing to sell something. They have to come to an agreement. And there has to be an overlap in that agreement in order for a transaction to take place, okay? So it doesn't matter if you're in the stock market, crypto, Forex, futures, if you're in prison trading cigarettes, I don't care. It's the same concept. There has to be an agreement, otherwise no deal, right? And then price doesn't move. So with that said, I'm out. I'll see you guys on tomorrow's free live stream. It's a Monday. I'm recording this on a Monday. So Tuesday, I'll see you guys 9:15. I stream every Tuesday, 9:15 a.m. The link's in the comments. 100% free to join. I will be on Facebook in the Facebook group as well. So I'm going to be all over the place. I'll be on Twitch, X, Facebook, YouTube, Discord, probably not TikTok, but we'll figure it out. All right. I'll see you guys then. Thank you all. Bye.